All right, good afternoon, folks. This is your daily trade analysis from SeasonalSwingTrader.com. Today we're going to take a look at the March U.S. Treasury bond contract. And keep in mind, if we're looking at the Treasury bond, you can take a look at the 10-year notes or the fives, even the twos. Mostly in our letter, we'll focus on the 30-year and the 10-year note, but they all will generally move in tandem. So today, looking at the U.S. Treasury bond March contract, the ZBH7 or USH7, depending on your platform that you're trading on. We've, since the Trump election here on the 9th, we had a dramatic sell-off, and we tried to, trade it in this narrow channel to the downside. We finally broke out above that and have a semi, bottoming formation here. And looking at the seasonals, we've got a 3-year average and a 5-year average, and then of course the 10 and 15-year trend down here. Seasonally, over the last 10 years, this is about a 50-50 trade. It's worked more favorable over the last 3 years or so compared to years past. But over the last 10 years, it's been about a 50% trade that has worked out to the upside, and over those 10 years you've had a cumulative gain of around 2.5% versus a cumulative loss of around 2% to the downside. But overall the gain has been a positive 20.7% to the upside. So I do kind of like this trade, even despite the 50-50 odds. Of course, any trade is 50-50. It's either going to go up or it's going to go down, or it could be neutral and go sideways, but you're going to either be wrong or you're going to be right. So I do like this trade, especially because I'm looking at the indices. I like how we've come down here and bottomed out, and I like a possible trade up to the 236 area. And the reason I like this is because I scroll over to the indices, and we're also putting in a top. Now, typically the bond market and the indices will move inverse. That's not always the case, but it is right now. The bonds have been getting hammered. The markets have been rallying, and I think most would agree that we should and could expect some short-term corrective action in the indices. Now, nobody has a crystal ball who's to say that we are going to correct at all, but I think that is the general consensus, and actually when the general consensus, you may want to fade them. But in this case, we are looking at multiple topping patterns in all of the indices, and I do like some pullback in the S&P, Dow, Russell, Nasdaq, which should lead a bid in the bond market. So let's go back to the 30-year. We do have some short-term bottoming action, which we mentioned. If you look at the weekly, we are testing the 200-day. We didn't quite get a bullish outside reversal bar on the weekly, but we did have a couple of bullish price action right there at the 200. We came down. Remember, we highlighted this several weeks ago as possible support. Well, we failed at that 50%, and we did note that if we did fail at the 50%, we'd probably come back down and test the 200. So we go down to the 200 and we move backwards. You can see that we do have past price action down here, which should serve as support. You can see all this action right here. So assuming we hold these levels here, I think that we would like to get above the 50% retracement level, but by the time we get up there, we would have missed a decent part of the move. But just watch and see if this 200-day holds on the weekly. Looking over the monthly, not a very pretty picture for the bulls. Very weak here over several months. And this is the 50-day on the monthly. That leads us to think that we could possibly head down here to the 618. But if we do get back and close higher to start the month of January, and end of January close higher than these highs here, I would suspect a possible run up higher. So that's all we have for today, and we'll see you next time.